Ladies and gentlemen, good day and welcome to BharatForge Q2 FY21 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Kalyani. Thank you, and over to you, sir.
Hello. Good afternoon, ladies and gentlemen. I'm sorry to keep you waiting. Thank you very much for making the time to attend our phone call post our Q2 results. I have with me members of our finance team, investor relations, and our business development and marketing. I want to just say one thing up front to everyone, that we are living in unprecedented times where there is no certainty and any projections that we are getting from, long-term projections from any customers. So I will be erring on the side of caution in anything that I tell you, because I don't want to, give a false impression or, misrepresent in any way. Things are changing from day to day, and the fear of a second wave in Europe is quite real. And although there is no impact of that so far, we can't underestimate or discount what may happen if such a thing happens. So with that being said, I prefer to be completely open and honest with you all that we really don't have long-term projections for anyone, but I will still attempt to answer all your questions to the best of my ability. The standalone performance during the quarter was as expected. We are seeing obviously an improvement in domestic revenues, considering that it had gone down to the lowest possible levels in Q1. The commercial vehicle sector, which probably in Q1 was at a 20-year low, has now started growing. And whether this is a Diwali-led, let's say, surge or it is a sustainable surge remains to be seen. But we are able to meet any requirements of our customers, and we have also ensured enough, let's say, fill of the supply chain, both outbound and inbound, in order to be able to cater to any surges in demand from any of our customers. Just want to tell you that we will not disappoint any of our customers on volumes. We are consolidating the calendar Q2 of our global subsidiaries, which was the quarter which had the maximum COVID impact, and the figures there are for everyone to see. We are restructuring and focusing on cost improvement, optimization on all our businesses. This is something that is ongoing and will continue. Looking ahead for the demand in the coming quarter, the outlook is positive, and we just hope that things continue in this same direction. On the export front, we are seeing signs of improvement on demand, especially in the commercial vehicle segment. In North America, a little bit less in Europe. I would like to highlight that the oil and gas sector is something that we don't see any significant business right now because of the overall price of oil where it is, and the fact that our growth in the oil and gas business was largely in the fracking side. And we will see a significant reduction this year compared to last year. Aerospace is an area where we had planned to see significant growth, but due to the overall aerospace market softness, this growth will not be as anticipated, and we continue to work on developing a lot of new products. But this will take a little more time, but I think we're still making positive progress on aerospace. The area where we see a lot of potential and positive momentum is in the renewable space, especially on wind energy. We see wind energy globally as a big business and starting to do quite well. Especially manufacturing of certain aggregates for the wind energy industry, such as gearboxes, etc., in India, is picking up in a big way because they are exporting. And also because of Bharat, imports of these aggregates from China into India have come to a stop. So this is a positive. Similarly, the US Class 8 is a positive. If you look at our automotive business, compared to last year, we are, on the domestic side, I think we are only down by about 15%. But if you look at the export business, we are down by close to 40%. If you look at our industrial business, we have almost a flat business compared to last year, and that is in spite of the one-time small defense business that we had last year. On the industrial activity in the export market, we have a huge drop on oil and gas and areas that are related to oil and gas, such as high horsepower engines. And we are working very hard on trying to fill up this business using similar equipment and fungible equipment that we have, so that we don't have to make any new investments for meeting this by making products for the renewable energy, marine and other sectors, in both for global markets as well as for India. If you look at our balance sheet, we have a fairly strong balance sheet. We have long-term debt of about 2,300 crores, working capital and bill discounting of about 1,300 crores, cash of about 2,400 crores. So overall, quite a healthy balance sheet. Areas where we hope to grow our business is on the passenger car sector, is on some of the commercial vehicle, agricultural and industrial sectors where there is growing demand in India and growing sourcing opportunities for us, supply opportunities for us from Europe and North America, but more from Europe. We are working with several new customers on programs, and some of our new programs are starting to ramp up this year, but it's going to take some about a year till it shows some significant benefit. We have almost no capex plans. We have in the first half about 200 crores of capex, and I don't think there's anything more that we will do in the second half, maybe 50 crores or so. Nothing more than that. Last year we did 550 crores, so I think between last year and this year, 800 crore capex is more than what we need, and in our existing products segments, we don't need to make any new capex. On the defense front, we have had several very successful trials on the artillery side as well as on the vehicle side. However, because of COVID, there has been, I would say, at least 4 to 5 months delay in tests, because people have not been able to meet and actually go and test products as frequently as is needed. So there is a slight lull on that side. But nonetheless, we are still in a good position for the opportunities we are pursuing, and we hope that very soon this will all resume. So I think that's really all I had to say. The company is focused. We will manage our balance sheet. We will be tough on capital allocation. We are focusing on free cash generation and on looking at growth opportunities. So that being said, I think I'll open up for Q&A. So please feel free.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wish to ask a question at this time, they may please press star and 1. The first question is from the line of Kapil Singh from Nomura. Please go ahead.
Hi, sir. Thanks for your comments. I think they clarify most of the sector outlooks. I just wanted your views on when we look at growth for next 2-3 years, not short term. When you talked about oil and gas, is it more of a short term view, or you think this is more of a medium term view that some other segments will need to fill this? And we see pretty good performance in passenger vehicles. So what is the outlook for this for next 2 to 3 years?
So Kapil, I'll take your second question first. The passenger car sector we anticipate continuing to grow. This year, whatever new programs and new products we have to develop will be a little slow because people are not able to meet and there's no new testing, validation and stuff. That is all getting slowed down. But we are definitely going to substantially increase our passenger car business for exports and for domestic. For domestic, we've won business with most of the new players and new platforms that are coming in, and we have a lot of new business from outside as well. But that is going to be over a period of 22-23 ramp up. On the oil and gas side, honestly, I don't know what to tell you. Right now, it is driven by cost, where the fracking is at a very subdued level. I think from, what was the peak? 1800 rigs, Subodh? 900 rigs, sorry. 900 rigs from the peak, now it's at below 200 rigs. Below 150 now. So, this is a business that turns on and off in a matter of a week. So the positive about it is that it also is a very low capital to start. To start a rig is, matter of 20-25 million. It's not like offshore rig where, you have to invest $few billion before and wait 5 years before anything can happen. This is a matter of weeks. So it really depends on government policy, on oil independence and, energy dependence, what they decide to do.
Okay.
But right now, the outlook for oil and gas is very subdued. For our products, very, very subdued.
Okay. So, sir, when you look at the business over next 3-4 years, the thing is that some of these, businesses have, for example, the U.S. truck business, we see that it peaks out around 330,000. Domestic also, we see, similar things. So I think what I'm trying to understand is that the PV business, for example, is one major growth driver that you have talked about. Is there anything else that the company is also looking at? Are you also open to acquisitions? Because, BharatForge hasn't done any large acquisitions. Would you be looking at areas beyond metal forging also when you look at next 3-4 years?
The obvious answer is we are looking at opportunities beyond metal forging, obviously, but in areas where we have either customer complementarity or some amount of technology knowledge that we can leverage. So you will hear more about this in the next 6 months. Right now we are looking at all opportunities, and first we are looking at what we can do using our existing capacity and use that better, and by getting into new areas like I mentioned, marine and the renewable energy sector. We're putting a lot more on that. So these are the kind of opportunities that we're looking at.
Okay. And so just lastly on capex, I see that consol capex in first half has been about 340 crores. So full year consol capex would be what, close to 700 crores?
No. Full year consol capex will be in the region of about 450 crores this year.
So first half has been pretty high. What is the reason for
That
that?
is because our new aluminum forging plant is completed in Europe. So this was the capex which was required for that.
Okay. Understood. Thank you, sir. I'll come back in the queue.
In Europe, in Germany.
Thank you. The next question is from the line of Amin Garhani from CLSA. Please go ahead.
Yes, good afternoon. Thanks for the opportunity. Just on the export non-auto business, you mentioned wind energy and marine engines as possible offsets. So, in the near term, are we seeing any substantial revenue from these? And B, from an opportunity size point of view, can they be as large as the oil and gas, maybe say over a 2 to 3 year period?
So the second answer is yes. In a 3 to 4 year period, it could be as big, if not bigger. And we already have started supplying products into both these sectors in a small way. I think today the business is probably in the region of 50 crores or so, but we have line of sight to at least about 3x immediately in the near future, and then we will look at getting new business that can fill up the rest.
Okay. And if I look at your the export industrial revenue base right now, which is like 180 crores, would it be fair to say that oil and gas is like close to zero, or does it still have some substantial amount of oil and gas revenue in this revenue?
This quarter was about 3-4 million. Yeah.
Okay. So basically, I mean, these numbers are already factoring the decline, and if it turns like you said, then that will be add to that. We don't.
Look, when you're at 3-4 million compared to 25 million, you're obviously at the bottom. It can't go negative.
Yeah. Okay. And just one small clarification, in the results. I don't know if it's a very small thing, but you have a note number 7. You put something about India's code for social. I was not sure, if why.
That is the auditors have asked us to put it. It's for all companies now.
Okay.
There is some new social code which is going to come out, which is not yet notified by the ministry.
Mm-hmm. Okay.
Those are yet to be notified. So some companies have chosen to put it as a note. Some companies have said they will do it after it is notified. Okay. So our auditors, being E&Y, have chosen to err on the side of caution.
Okay. I mean, is it like a material thing for you? Because I understand it's mostly for good workers.
So we don't know what it is.
Okay. Understood. Okay. Thank you. I'll come back in the queue.
Thank you. The next question is from the line of Ronak Sarda from Systematics. Please go ahead.
Yeah, hi. Thanks for the opportunity. So the first question is on the India CV revenues for the quarter. We've been pretty well at almost 90 crores run rate, despite a sharp dip in production. I mean, it is still much below the usual levels. So could you explain us what has driven this kind of an outperformance?
Our sales were about 90 crores, you're correct. So both maybe you can answer. BS6 to some extent.
It's actually flat YOY.
Yeah. So in spite of a lower production of commercial vehicles, how come our sales are still flat compared to last year?
Basically, we have been focusing on, one is of course BS6 products. Number 2 is higher share. And number 3 is, I would say, faster response to situations given where the market has been. So we have been, as a factor of all of these 3 things, we have been able to, in fact, increase our market share, and that is sustaining as we see it.
Okay. Sure. So, I mean, a similar, assuming growth in production volumes in the second half, we should see a similar growth in our numbers as well. Is that a fair assumption?
That is an expectation, yes.
Okay, sure. And the other question was on the North America series. So good again for you. I mean, given when are we seeing production ramping up for the Class 8 trucks? I mean, given the sharp increase in the order book now, is it more like Q3, Q4 numbers will see a jump happening as well?
See, right now, in whatever numbers you're seeing, and I think you know this very well, the numbers really reflect order bookings. They don't necessarily reflect production on ground. And there is if you look at how the U.S. market goes, it works on a backlog surplus. And ideally in a good market, the backlog should be at least worth a year's worth of demand. And right now it is not that. So everybody is still not very optimistic in terms of increasing production line rates. Yes, it's definitely good news, but these kind of order levels have to sustain for a few months before some traction happens in the market. That is our view.
Also remember that one big uncertainty in the U.S. about the politics is now over. So, everybody will now, let's say, figure out what the new normal is.
Sure. And the other question was on the domestic industrial. We have seen a very sharp recovery here as well. Is there any lumpy defense business, or this is driven by more of tractors? Yeah.
There's no defense business in this. I will allow Subodh to please answer.
Yeah, in our industrial business, we are seeing some positive traction, but this is largely based on, I would say, finding new products in new industry. And in the existing product segment, we all know ag is strong and so on. But other than that, it really depends on new products and new industry.
Right. Sure. That's really helpful. Thanks and all the best.
Thank you. The next question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi team, thanks for the opportunity and thanks for the very candid commentary at the start. Few questions, could you share what is the tractor revenue in the domestic non-auto sales? Will it be around 600 crores or so?
No. Tractor sales was about 30% higher than last year.
Okay. What will it be at the, like this and
about 40 crores. I would say about 40 crores for the quarter.
Okay. And secondly, like in general, what is the lead that BharatForge sales has to the actual production, both for India and US? Like is it a 1 month lead or a 2 month lead?
India would be a much shorter lead. I would say anywhere ranging from 10 days to 3 weeks, and abroad I would say 2 months. That's about 3 months. It depends on geography, but between 2 to 3 months.
Okay. And lastly, just on the other expenses, in the last call we had commented that the company, like 70% of the cost cutting exercises, over 30% is remaining. How would you put that today when you look at your other expense and staff run rate?
Yeah, so last quarter was abnormal because for almost couple of months there was no activity. But as compared to last year, there has been work which is being done. So as compared to last year, the level of other expenses are coming down.
Correct. So are you planning to sort of bring them down further from these levels, or how should we see it for a similar?
It's a continuous activity, and being in fixed in nature, there are certain limitations, but we are working on to reduce it further.
So will we see more VRS offerings?
Yes, so we have announced second. We are working on it. We're still working on it.
And so is it fair to say that, the VRS offerings also reflect that you sort of anticipate a slow volume recovery, so which is why you are leaning down on the cost structure?
There are two things. One is that, and the second thing is that we are also, using digital and other things to restructure our entire organization to make it more variable cost led and more lean rather than fixed cost oriented.
Okay. No, great. Thanks for the response.
Yeah, exactly. That's what we're doing. We're creating a new organization structure.
No, I think it's best wishes for the future, and thanks for the response.
Thank you very much.
Thank you. The next question is from the line of Sonal Gupta from UBS. Please go ahead.
Yeah. Hi, good afternoon, and thanks for taking my question. Just continuing with the other expense question. Earlier we were looking at all these digital initiatives and whatever cost-cutting programs to sort of start yielding results from Q2 of this quarter or Q2 this year. And would you say some of those have got postponed a bit, or just trying to understand?
The problem is that there are, as Kedar mentioned, some of these expenses are fixed. Okay, and only the variable part of that is what you can bring down on a variable basis. So if my production is today running at 50%, the fixed portion I can't do anything about right away. I have to do something structurally about it. The variable part of it is, what is coming down. There are so many, kind of licenses and fees that one has to pay for all the different technologies that we use, whether it is SAP, whether it is, your technology licenses, etc. These are all, your fixed costs. There's just because my business goes down doesn't mean they're going to, reduce or give me a waiver for 1 quarter or 2 quarters. It doesn't work like that. So those are the elements that are fixed, and the only way we can, let's say, structurally reduce those is if we actually reduce number of people using these technologies, and that takes time because that, is not so simple.
Okay. No, because if I look at your Q4 revenues were similar to what you're doing in this quarter, and your other expenses are also similar to what you did in Q4. So there's not much of a change in that sense. Just trying to understand when do we see unless the Q4 also had some benefits.
Yeah, and also there is an exchange loss which is sitting of about 10 crore, which is sitting in other expenses. So if you exclude that, then you will see actually a reduction in as compared to Q4. And in Q4, the lockdown happened in last 8 days, so we were not having any time to counter that or to take actions. Whereas this quarter, or let's say from April onwards, we have taken cautious approach of reducing the cost. So that impact you will see. So if you reduce the exchange impact, then you will see a reduction as compared to Q4 also, and as compared to last year's same quarter.
Q4, I'm reducing the exchange loss, but anyways, on the other things, just on the, one was on Class 8 production. Because you're saying that you have a 2 to 3 months lead over production. And if I look at the production data, the Q2 quarter, US Class 8 production is back to what we did March quarter levels. So are you saying that, you're not really seeing much improvement from the Q2, what you've done in what the industry has done in Q2, in Q3, in the December quarter in terms of production?
See, there are two factors here. Number one is when you do business, particularly with the kind of market share that we have, you also have to have some amount of safety stock in the system. So the volatility in the schedules typically gets absorbed by the safety stock, and then you have to replenish those safety stock, which then falls within our overall lead time. And it takes a lot of perfection to get to that level, and we have experience of the last 15-20 years trying to do that. And based on that, we are able to manage the whole combination. So right now the demand pattern is very volatile. The demand pattern is, it comes in a matter of weeks, and in many cases, we are of course single source, and many cases where we are multiple source, then it also is an opportunity, because at the end of the day, the velocity is a factor of winning the business as well. So that is where we are concentrating on as well.
Sure. Okay. And just on the India CV bit, I mean, like you said, BS6 has been also a factor in terms of improvement. So just wanted to differentiate between and potentially the same thing, that inventory adjustment and things happening which would have maybe pulled forward demand for you versus maybe the OEM production levels. But I mean, could you sort of indicate what sort of ASP improvement or are we seeing because of BS6 in India?
What improvements? Sorry.
Average selling price.
Currently, the OEMs are not passing on much to the market. In fact, it's been a double whammy for them. So what has happened is, in that process, the pressure obviously comes down the whole supply chain, and so there is a challenge in that process. I would say in our case, we've been able to get some benefits out of the change, at least from a cost recovery point of view. And it depends on the individual components. But overall, at the overall level, it is a stress situation as far as that aspect is concerned.
Okay, and just a last question, if I may. On the aerospace, I mean, like the last quarter, clearly, I don't see what changed between last quarter and this quarter. Of course, the aerospace industry was in bad shape even last quarter. So, and at that time, I think the commentary was a little more upbeat, and now things are sort of getting pushed out a lot more. So, could you sort of indicate what's changing there?
I don't think there's any fundamental difference between what we were saying last quarter and next quarter. This quarter. We were hoping to see a steeper recovery, but that has not happened. And this second wave, and we had hoped that travel bans would be lifted. As you remember, originally September, October, the travel bans were to be lifted, and travel was to restart. But none of that has happened.
Okay, great. Thanks. I'll join back the queue.
But on a secular trend basis, we are still aiming to grow our aerospace business as we have planned, but we are not anywhere near where we want to be.
Okay, great. Thank you so much. Thanks. All the best.
Thank you. The next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Hi, sir. Thank you for giving me the opportunity. So just wanted to follow up on a question which is, or on a comment you made earlier. On the wind energy side, what we are seeing is a demand coming from gearbox manufacturers in the domestic market, or we are also seeing some traction in the export segment as well?
Both.
Okay, and you said wind energy and marine engine combined is about 50 crore revenues annual basis, or it's a quarterly revenue that we have started to see now?
No, it's an annual basis right now, but we have a line of sight to triple that.
To triple that, okay.
We have already got business to triple that over the next 1 year.
And any incremental clarity we have got on the defense side? A couple of quarters back, we were quite excited that this offset clause has come, and we will start to see probably some ordering on the defense side. Any progress on that you have seen?
The problem, as I mentioned, on defense, there has been two things. One is you have not had any, physical meetings with any of the buyers. B, there is a acute lack of cash in the system to provide budgetary support for, procurement. So these are the two issues that are plaguing this system. But I think the government is well seized with this, and we are on track to seeing in the next 6 to 8 months at least some orders coming through.
Okay. And finally, Amit, today we have seen a news that there's some PLI scheme which is being approved for auto and auto component space. Any idea you have? Have you been consulted by the government, and do you have any idea as to what it is this for, and what kind of benefits it can give to our company, given the fact that we are largely focused on exports?
Yeah, so this was in the offing, And last month the NITI Aayog had said that this will be done to boost domestic manufacturing. Basically, it's too early for us to go into the details. We need to see the contents in full detail, and especially the gazette, to understand how it's applicable and how we can use it.
Okay, thank you and all the best for the future.
Thanks.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. Couple of questions. One is with respect to our RM cost, we have seen a reasonably good savings on YY and QQ basis. Is this due to reflection of lower steel prices, which would have been you would have got a pass through and you would have passed it on?
No. Actually, what you have to do for this quarter is you have to look at RM and manufacturing expenses totally, because there is a impact of inventory increase. So you are seeing raw material prices, raw material costs going down and manufacturing costs going up. So the inventorization of raw material costs and release of manufacturing expenses. If you combine both, you will see on a totalitarian basis it's same as last year, and therefore if you look at the gross margin at 43.3% is reflecting that.
Okay, right. And with respect to our interest cost, there has been a substantial reduction which has happened on YY and QQ basis. What has led to this kind of reduction, and is this sustainable?
This is again an exchange impact, because as per accounting standard, part of exchange loss, since we have foreign currency loans, part of exchange loss or income gets classified as interest. So in last quarter we had an exchange loss which was included in interest cost. This quarter, because of rupee appreciation against especially dollar, we had a gain which accounted for. So on a steady state basis, we have about 17 to 18 crores of interest cost.
Okay. And can you quantify the exchange gain and loss respectively?
Yeah, that's what I said. So it's about 10 crores.
10 crore of gain in this quarter. Yeah. Okay. And loss would be last year?
It was about 10 crores, 10 or 11 crores.
Okay. So then the right one. And lastly, what was the USD INR realization in this quarter, and are we hedged for next 6 months or longer?
It is about 72 rupees right now, and our next 2 quarters are partially hedged at a similar, slightly higher rate, maybe 72.5.
Okay. Understood. Great. Thanks and all the best. I'll come back in here.
Thank you. The next question is from the line of Nishant Vas from ICICI Securities. Please go ahead.
Yeah, thank you, sir. Thanks for the opportunity. So our first question is on the European business. So could you quantify if you saw the previous quarter, because you consolidated 1 quarter lag, did you see any furlough benefits accrued for the company for the European subsidiary? And also, what are the status of the cost reduction initiatives that you have been working through over the last couple of quarters?
Yeah, so we did have some amount of good surprise benefit, but it's not very substantial. And secondly, the cost reduction initiatives are ongoing, and we expect that this will fully be complete by end of 21.
Okay, so
also does involve 6-month notice and layoffs and restructuring and lots of things.
Okay, so would you be happy to quantify any of the targets in terms of employee cost reduction or headcount reduction?
No, it's too early, because we have to do it based on business levels also. So I think it's a little early.
Okay. And my second question is a clarification on an earlier question on the CV level of production, and you just mentioned there is also an inventorization situation. So are we also to account that into a factor that the OEMs asked you to kind of have a channel filling situation also over and above their production level?
Sorry, I didn't get that. Can you say that again?
So in your accounts, you can see that you had an excess inventory from higher production.
and not sales, and also on your balance sheet we can see inventory on a standalone basis is similar to last year. So there was an earlier question on PV production being, in terms of revenue being high, equal to YOY basis, though production was lower from an OEM standpoint. So just trying to check, did the OEM kind of ask you to keep production higher to also fill
No, we have supplied based on what orders we have received.
Okay, so just to get a sense, which segment would have this excess inventory creation on a swing basis being catered to on the standalone basis?
No, there is no excess inventory being created, especially in the domestic market. We're supplying on a JIT basis.
Okay. No, just ending. Okay, sure. And the third point was on the cost recovery. Subhash, could you just highlight a little more on that side on the domestic OEM? So are the contractual situations also getting changed at the OEM level on pass-throughs?
What exactly do you mean by that? Because pass-through only applies to steel usually.
Okay, so when you mentioned cost recovery is becoming a bit difficult from the OEMs because they are not passing prices.
It's like this. The OEMs are.
They are not passing.
Yeah, exactly. The customers have everybody knows that the customers have a high cost in implementing BS6. And everybody obviously wanted to implement those changes. But what we are being told is, given where the market is, the market cannot absorb the increases. And as a result, OEMs are not insisting on the change, at least through their customers. But, for people like us, where the cost of manufacturing has increased, you have no option.
Okay, so those pass-throughs are flowing in the way you usually have to on our cost. Okay, thank you. Those answer my question.
Thank you. The next question, follow-up question from the line of Kapil Singh from Nomura. Please go ahead. Kapil, your line is in.
Sir, my question has been answered. Thank you.
Okay, thank you. The next question is from the line of Raghunandan from Emkay Global. Please go ahead.
Thanks, sir, for the opportunity. Couple of questions. Firstly, on the MEIS benefits, how much was it this quarter, and how does it compare with last year? And would cost reduction efforts be the way to offset this loss?
Yeah, so the impact for the current quarter was about 6 crores because it was up to 31st August 2020. And obviously there is a road tape scheme which is going to be announced soon, which will start from 1st of January. So we don't know what is the rate of that currently, but also we continue to focus on other cost reduction initiatives to counter a portion of this loss.
Understood. Thank you. My second question, Europe has seen a lower fall in Q2 in comparison to Americas region. Do you expect the trend to reverse in Q3 given that elections are over? Also, can you talk about Europe situation? What kind of a fall you would expect in Q3?
Overall. It's really difficult to give you an answer for this question because none of our customers are giving us any kind of long-term, feedback or let's say projections.
Understood, sir. One last question. Generally on the overseas customers shifting sourcing from China to India, anything you can throw some color in this regard?
We are hearing a lot about this, but as you can imagine, the products that we supply are complex products. It takes a lot of time to change anything and approve some as well. And yeah, exactly. And in the segment that we are involved in, there is not that much of Chinese involvement in this. So let's say that's something that we are watching.
The way I would explain it is, on the commercial vehicle side, there isn't much Chinese supply base. But on the pass car side, there is a large Chinese supplier there. So there is an opportunity on the pass car side to get into the supply in Europe especially, and get a larger share or get new business. But for that, the physical meetings and the product development and engagement has to start.
Thank you, sir. Wishing you all the best.
Okay. I think we have a last question, so please go ahead.
Yes, sir. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much. Can you talk a bit about what kind of government benefits you got in Europe?
The only benefit we got is there's something called Kurzarbeit, where, for a certain period of time, for a certain number of employees, the government pays part of their salary, 70% of their salary.
Okay. And what period was it? Was it throughout the quarter?
No, that was for the last quarter and part of this quarter as well.
Okay.
And now there is a discussion going on to try and keep it going. That is what is the industries are asking for that.
Okay. And lastly, can you give the number for your consolidated net debt?
Consolidated gross debt, I can tell you.
Okay.
What is the debt? Total consolidated debt is 2,800 crores.
Okay.
Only long term.
Okay, only long term. And including the working capital?
Working capital will be about 1,300 in India and about 500-600 crores outside India. 600 crores.
Okay. Okay, that's all.
That includes what is bill discounted and stuff. Total and
okay, includes bill discounted. Super. Thank you so much. All the best.
Thank you.
Thank you. Ladies and gentlemen, that will be the last question for today. I now hand the conference over to Mr. Amit Kalyani for closing comments. Thank you, and over to you, sir.
Ladies and gentlemen, thank you very much for your time and interest and patience in today's conference call. I may not have been able to answer all your questions to your satisfaction or be overly optimistic, but it's purely to be prudent and to be realistic in the times that we live in. Hopefully, things will turn out better than what we are saying, but we are working very hard as a company and as a team to come out stronger from this, and we look forward to your continued support and interest. Thank you very much.
Thank you very much. Ladies and gentlemen, on behalf of BharatForge Limited, that concludes today's call. Thank you all for joining us, and you may now disconnect your lines.